Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
We're excited to be on today with James Nilsson. We're on another episode of Kiss My Assets podcast. I'm Jamison Manwaring, co-founder, CEO of Neighborhood Ventures, and I have my colleague and sidekick and podcast co-host, Heather Andrews in Investor Relations.
Yes, and I use these podcasts for my own education, so I force them to let me come on.
And we're excited, James, that you jumped on. You know, Heather and I, both before we moved to Arizona, we were both New York City residents. You lived out of the city or in the city?
No, in the city.
Yeah.
My favorite was Upper West Side. I lived a little bit everywhere, but that was one of my lots of good things in the book. But my favorite was reading the different places in New York. I mean, like, I know what's there. I've been there. So.
And both of us kind of retired from the city and moved out to Arizona, the retirement state Arizona. We're not retired, but we retired from the busy life, but we both really miss New York. So we're excited to have a real New Yorker, somebody who's there working on the street. I saw you had a post today. You're out showing a new property, a parking lot that could be, or a parking garage that could be converted. Love seeing that stuff because it illustrates the difference between the opportunities in a place like New York and the opportunities in a place like Phoenix. You know, you're looking at this 4 or 5 story parking garage and what you could do with that space. And here we're looking at acres of land that's empty, and it's just so different, such a variety.
Well, I didn't even learn the term air rights until I moved to New York. I didn't even know that was a thing, that you could sell the air above a building.
And it makes sense because everything matters in New York. So, James, welcome on. Excited to have you on. And before we kind of dive into some things about your background and about your company, could you tell us your path to get into commercial real estate development? New York, obviously, there is a big finance town, a lot of opportunities there. What got you to into real estate?
First of all, thank you so much for having me on. And I know this is the third time now that we're connecting. And in this day and age where so much of this is done virtually, I love the fact, Jamison, that you showed up to my office on 530 Fifth Avenue and told me what you all were doing. And it was a great way to meet in person before you came on my show, and really appreciate all the wisdom that you shared with your incredible platform and what you're doing. It's very inspiring to investors who want to step up their game, and it's amazing what you all have accomplished. So really happy to be here now. Hopefully reciprocate and share some of the wisdom from my book and how it can help give your audience the insider's edge to real estate investing. So,
it's fun to turn the tables and learn more about the background. It was fun to be on your podcast. So now, tell us more about your story.
Good. So, well, I wish it was more than luck, but 25 years ago, I didn't even know real estate was a thing when I graduated from Colgate. I was an English major. All my friends had investment banking jobs. I thought I was going to go out onto the West Coast and make movies or something, until I realized that no one was paying me to do that. And I was $5,000 in credit card debt. So I went to the Career Service Center, and as luck would have it, there was a deadline that day for a sales associate position at Massey Knakal Realty Services. I didn't even know what that was, but it sounded like a great opportunity by a company that was founded by a Colgate alum. And I dropped my resume in the box that day, and lo and behold, they called me in for an interview. I'd only even been into New York City a couple times before. So grew up in Wisconsin, and then spent 6th grade on in Maryland, and then Colgate, obviously upstate New York. But went in for the interview on Park Avenue, just had a great gut feeling about the place, which I think is so important in this business. It's about the people. That's what I really learned and talk about in the book. And so was very fortunate to have met Bob Knakal, Paul Massey very early on in my career. And lo and behold, they offered me a job. And so after I'd been there for a couple months, they like to joke with me, and they told me, James, only 2 people applied for the job, and you were actually our second choice. So that being said, the other guy only lasted about 6 months. And then, fast forward 17 years later, I was a partner in the firm, and we sold it to Cushman and Wakefield. At the time we sold Massey Knakal, we were selling 3 to 4 times the amount of properties, investment properties in New York City as the next brokerage firm. So imagine,
Wow.
In a market as competitive as New York City, to have a market share 3 to 4 times the amount as the next brokerage firm. So, just had a really great platform and business plan where we divided up the city into territories and represented owners in the sale of their properties. And it was such an incredible introduction to the business.
Well, that's a really cool story, and it's amazing how, when you look back, you can connect the dots, but you never would have connected them beforehand, and it just one step at a time rolls itself out. One thing I got to ask that I'm just curious about, coming from a perspective that's outside of New York, did you ever work with any of the kind of famous folks that you would mind sharing with us? That I'm thinking about Barbara Cochran. I know she's, a New York person for a long time, was probably a lot busier several decades ago. Obviously, President Trump was there, did a lot. Anyone else famous you worked with? Just curious.
I've met both in person. Actually, Barbara spoke to our company, so I know a lot more about her.
She's great. She's amazing.
Did bump into our former president. This is probably, I don't know, 15, 20 years back at a charity event. But yeah, Barbara Corcoran spoke to our office, and what she talked about, and this was before Shark Tank and all this, but we were asking her, what is the key to success? What makes brokers successful? What do you look for? And I'll never forget the answer she gave me. She said, it's how someone handles failure. And I think that applies not just to brokers, to sales. I'm sure your story in building your business, there are obstacles, right? And for you listeners out there, you're thinking about investing, things aren't always going to go great. There's going to be challenges, but that how you handle failure. And she told this story about her star salesperson, who I think is still a Corcoran today, Carrie Chang. And at the time, she was talking about I think it was the late 80s, early 90s, when there was a huge crash in the market. And she was doing all of her business overseas with a lot of the, Chinese buyers. And then the market just totally shut down. And no one heard from Carrie for like weeks. So like, oh my gosh, what happened to Carrie? Their business, it's gone. And she comes back, Barbara tells the story, comes back into the office, looks like she hasn't slept, for weeks. And she said, I just got back. I went on this whole tour around Asia, and I ended up selling all the properties, and I found buyers. And, I think, not that things are as drastic today. There's certainly challenges out there, but I think the message is where there's challenge, there's opportunities. And if you are easily discouraged, I know when we talk about, and I sometimes with our junior sales force, when we talk about cold calling and what's involved, and look, people are going to hang up the phone on you. They're going to tell you no, and you got to have that mentality that one more no is you're getting closer to a yes.
And I love to think with Barbara, I can definitely see that tenacity. Even today, I think she's probably a few years out of retirement. I know she still does stuff. I don't know if she's doing real estate, but that tenacity really comes through. And I love her answer, because that applies to all of us. And like you said, in life, in whatever circumstance, I think back as you tell that story about a few things that have happened in my life, perceived failures which that's how I viewed them. And then they ended up being some of the most pivotal times that for me in my life, where I kind of went into the wilderness, so to speak, and then you come back renewed, refreshed with a better perspective. Yeah, very cool. Now, other question: have you sold any properties, bought or sold any properties for any celebrities, sports stars, without divulging any privacy? And
I want their full addresses, so you can.
You know, it's funny because pretty early on in my career, I started building out a team, and sometimes I wouldn't even know, especially if you have another broker bringing a buyer, you don't even know who's going to show up. Some of the guys in my office still give me a hard time because I once sent Scarlett Johansson to voicemail. I didn't realize who she was when she called. They said, "Do you realize who was just trying to call you?" But we had this property in the village that was the old Players Theater, which was a really historic, and a lot of actors had performed there, and so got a lot of interesting calls there. We also sold the Cafe Wa nearby, where Jimi Hendrix had played and Bruce Springsteen would show up. So I do love that part of the business. And when you're in New York, there's a lot of history, and as a broker, you're dealing with all different, types of people, investors, big companies, a lot of foreign buyers from around the world. So it definitely keeps it interesting.
Yeah, what a cool place to be in real estate. And we love Phoenix, and it's a very different market, and the things we look for here are different. We were really excited. Our last building had previously been owned by George Brett of the Kansas City Royals. If you remember him, I think he was a shortstop long term. So
I have no idea who that is.
Yeah. Well, it's interesting. A lot of the professional athletes have gone in. I mean, Magic Johnson's probably one of the most famous to go out. He's a partner, if not a founder, of Canyon Funds, and I think he owns, a lot of these entertainment venues as well. And so, no, it's really smart to see that some of these professional athletes understand the inherent value of real estate and saying, hey, the money's great right now, but it's, once it's time to retire, and they want to have hard assets that cash flow for the future. So.
Yeah, and it's great to see, because we know a lot of the stories about some of the guys in the 80s that lost their income. I think it's a different world now. They're smart about putting their money away. They know they have 10 years, 5 years, peak earning potential, and they want to put it away. We have a couple of professional athletes who have invested in our fund, and love seeing their names coming across. They get treated the same as everyone else, but we're excited.
Mostly because I don't know.
Yeah,
sports.
yeah, that's right.
Well, there was a quote. I think it's from maybe your grandfather in here about to buy land. It's the one thing they're not making more of. I thought that was a great. Yeah, I thought that was a great. That this in real estate is a good place to put it. They're not making more of it.
Yeah, and it was interesting because I was at a lunch today, and we were talking about kind of the appeal in New York City, and there's no place to expand to after you're off, the island of Manhattan. That there's, of course we have the boroughs, but after that you're moving into the suburbs, and so there is that scarcity. And I think, on one hand, it's obviously a lot more challenging to build in a market like New York and the approvals and all that. But once you are successful in doing that, you have something that has a lot more value. There's other places where they have no zoning or very flexible zoning. A lot of people like to talk about Texas and how easy it is to, do business. And yeah, that's right. I mean, you can go in, you can get approvals, you can build, but then so can your next door neighbor who owns the land directly across. And if you've just built a gated community, in 5-10 years, is that going to become, outdated to the next, project that's next door? So, I mean, not right or wrong, but you just have to think of these things. But part of the value of real estate is not just location. I mean, that was one of the first things we're all taught: location, 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 but also the scarcity, which also adds to value.
No, that's a great point, and it's something you don't really think about as you say. Initially, but We love developers love Texas, to your point, because of there's less city requirements to get something built. And that can be a good thing and a bad thing. It's a good thing when you're building it, but there's not really a barrier to entry. And so, yeah, I think New York is kind of that prototype, but the place that we all think of when we think land is limited. You really have to be creative. You really have to know what you're doing. And then if you get something through to the finish line, boy, you really have something. And both Heather and I, as I mentioned, we both moved from New York to Arizona. It's still a piece of our hearts are there. And with that, I want to move to your book, The Insider's Edge to Real Estate Investing. And you talk about 10 proven steps to be successful, to become to get that insider's edge. And I want to dive into a few of these. So the first one is finding the right property type. The second one is know the players. The third one is spot the gems. And I wanted to dive into that one a little bit. So when you think about spotting the gems, what are the few key points there to find a gem in the vast market of all these basic rocks? How do you find that gem out there?
Great question. There's definitely two pieces to it. One is what you just mentioned, how do you find it? So the whole idea of how do you source great opportunities. And part of the reason why the book is called The Insider's Edge to Real Estate Investing is you can do just that. You can gain the inside edge. And I know, Jamison, when you came on my show, you talked about your experience as a trader. And you said that, if you're looking to make money in the stock market, everybody has the same information and you're just trying to be smarter on the other person of the trade. In fact, I've used that multiple times since you told me that. And so whereas real estate, it's not efficient. And, you might be competing with other buyers who don't have all the facts. In fact, I was just speaking with a developer, shopping center owner. I was out to lunch with him and he was telling me the story. He bought from a big publicly traded firm that has shopping centers all over the country. And he's a local player. And he said, when they sold this to me, they didn't realize that we could get part of the property entitled for 400 units of apartments. So that's a publicly traded REIT that, should understand what you can and can't do with the property, but they didn't have that local expertise. So that's the great thing about real estate investing is you can go in and you can look at something and say, all right, how can I add value? How can I reposition this? How can I reimagine what's here? And part of my job as a broker is I'm really always trying to sell that future upside. So I'm trying to think of all the possibilities, say, oh, well, it's office, but you could convert it to resi, you could do this, you could do that. But even, and I think I talk about in the book, one of my clients, Margaret Stryker, she's bought over a dozen properties for me, and she's so sharp. I mean, she knows the zoning handbook and what you can and can't do. And I remember she bought a property from me, a smaller property. I was thinking, why is she doing this? She says, don't worry, you'll find out after I close. And sure enough, she found some zoning loophole
mysterious woman. Yeah.
Build a carriage house in the back. Yes, she's sharp. So that's a big part of it is finding value where others do not.
So tell me, kind of compare and contrast the different strategies between, finding a property, a gem that you see potential in that you're going to reposition. Reposition mean maybe add units, do some work to it, other creative things, versus just buying property with a buy and hold mentality. In some ways that can work well also, but how do you, as you think as an investor, decide if you want to be more opportunistic with some of these versus, hold them and just let them work for you and generate cash?
It's a great question. It also, when I talk a little bit about your risk profile and what are your goals, and that's really important to establish out of the gate. What are you looking to accomplish for this? And there's not a right or wrong reason. And I should have said when we started, the way I do almost all of my investing is a limited partner. So I invest in a lot of different types of in deals. And sometimes it depends at that cycle in the market and what I'm looking to do. But, generally speaking, those shorter term holds are going to be value add or opportunistic, where you're looking to get a big pop in value and resell it. And yeah, if you're going to do that, generally those are more risky and they better have a better payoff. And then for the assets that you want to hold long term, you want decent cash flow. So there's not a right or wrong, but I think you need to go into this and understand, the pros and cons, where yes, generally, if there's a potential bigger return, if there's development involved, there's risk, right? And things can go wrong. And yes, it sounds great when you're looking at that pitch book and saying, oh, I could get 2 or 3 times my money. Well, that's great if you sell at this value 2 or 3 years from now, and hopefully values will hold up then, as opposed to, maybe a cash flowing deal where you say, okay, well, I know interest rates have gone up recently, but we can add value. We can still get positive leverage and get a high cash on cash return. So, again, you got to really ask yourself, what are your investment goals? Are you more conservative? Can you be patient?
Yeah, and you bring up some great points. I had a friend, an investor, reached out a few weeks ago and said, hey, I'm putting some money together. I think I want to buy a property. And this is a very busy medical professional, doctor. And my first question was that, do you want to go develop something? Are you looking to renovate something? Or are you just, do you have the time to do that? And the immediate answer is, well, no, I'm not looking for a lot of time here, but I want these great returns. And I said, well, if you want the best returns, you probably would have to be involved in some sort of partnership that's going to do some redevelopment. Otherwise, it's probably a good idea to go buy something that's just cash flowing, and it's turnkey property that's going to work for you over time. It'll generate cash flow, and then as the market goes up, you'll benefit from that. And that's kind of where he landed. But a lot of people think, oh, I got to get invested in real estate. I got to go do some development, not knowing that you really need to be an expert there. And I loved something Warren Buffett just said last week is, there's a lot of people doing stuff that they have no business doing. They're not experts in that space. He said, Warren Buffett's obviously a really intelligent guy and experience across fields, but he said, if it comes to something medical, I don't have any expertise in that area. I am not going to try. I know I need to call someone who has expertise there and get multiple opinions. And then, and I think that that's just good advice, that and in the side of the development property and owning a property that needs some repositioning, you do need to know what you're doing, and it can be a little bit more, there's more required there. And when you hit pitfalls, going back to what you said about Barbara, when you hit those roadblocks, figuring out how do you work through them. And I think that's one of the arts to it. Going on to your other points, point number 4, know what to look for. Point 5, initiate the underwriting process. Tell us a little bit about your underwriting process, whether you're an LP or you're helping a client purchase something. How long does it take? How detailed you get? And obviously the book is going to go into more detail, but what's kind of the key takeaways there?
Right. So first of all, this book will not teach you how to underwrite. I mean, again, there's great courses that you can sign up for that, Adventures in Commercial Real Estate, CCIM. There's programs out there. So again, reading a book isn't going to teach you how to underwrite. But the point is that, yes, you do have to understand, or at least have someone who can help you with the financial modeling if you want to understand what are the potential projections and returns for the property. But what valuation when buying a property, I kind of reduce it to something probably a lot more basic, which is, and it's really more of that understanding value, right? And understanding the market of where you're buying. And I really believe that it is so important to understand comparable sales, right? And not just you have to understand, especially when the market starts moving. Okay, so since last June, and here we are in May, we've seen interest rates are going up, so we've got cap rate expansion, downward pressure on pricing. So look, if you're looking at the comps that traded 6 months, a year ago, that might have been in a more favorable interest rate environment. So it's not just knowing the trades, knowing when they traded and understanding what's behind it. And also, if you're working with a great investment sale broker, they can tell you live deals that are in the market, what deals just got signed, what's on the market, how's bidding. But that's super important. If you're looking to buy a property, you want to obviously understand that you're getting a good deal for it. You need to understand the basic metrics. And I know when you all buy multifamily, I don't know if it's cap rate, I don't know if it's IRR, I don't know if it's price per unit, all the above, price per foot. But whatever, I mean, you need to understand what is that metric for that asset class that you're buying in that specific neighborhood. And you need to know the comps cold. And I talk about this earlier in the book about becoming that expert. Before I started picking up the phone and dialing for dollars, Massey Knakal said, look, you got to study this neighborhood for 3 months and you need to understand everything about this market. You need to know everything that's sold. You need to know where retail rents are, residential rents, zoning, infrastructure, and really get the lay of the land. And if you do that, so if maybe you're looking at buying in your own backyard, and investing in a deal, you want to really study that area and kind of understand the demand drivers and what's happening there, because that's really key to becoming a successful investor.
I think that's some good wisdom. And one thing that stood out to me that you mentioned is, rolling up the sleeves, really digging into a neighborhood, 3 months, spending 3 months there gives you the expertise that a lot of people aren't going to do that work. They're gonna look for shortcuts. They're going to look for other people's opinions and not go do the real work themselves. Love that.
Jamison,
Steps.
I
Yep.
want to add something else that you shared on my podcast, which I thought was really important, because you talked earlier, and maybe this goes back to the spot the gems and how to source great opportunities. So if I'm not mistaken, you all said that the 15 investments that you've done are off market. Okay. And we talked about this. Buying off market means that it's not exclusively represented by a broker. It's not blasted out. You can't find it online. Doesn't mean that there's not a broker who maybe help you find it. But the point is that I think also finding great opportunities is going out and doing the work. Because you just mentioned like focusing, pounding the pavement, and made me think about that. For example, I'm interested in investing in retail right now. I'm very bullish on retail. And so I started looking in my own neighborhood up here in Connecticut. And when I went on, CoStar, LoopNet, Crexy, and they do a great job of, listing whatever the brokers provide for them. But I could only find 2 things that met my criteria. And after driving the area for the whole day, I came back with like 20 leads. And some of them were for sale signs where they weren't, listed anywhere else besides maybe some small broker's website. Maybe it was a for lease sign where maybe I'd have interest in calling the broker and seeing if they'd sell. And maybe it was a boarded up building where I just called the owner directly. But I think the point is that, if you want to be a successful investor, you can't just wait for things to show up or find something that everybody else knows about. Or you go with, a group like Neighborhood Ventures who has that deal flow, and you have confidence in that sponsor to go find those great opportunities.
Yeah, your point about 2 listings or 2 opportunities were online versus 20 when you went out and found them, and you also had in mind that there was an opportunity in retail, and these are kind of the clues that you leave as someone who's been in the business 20 years, and the old saying, success leaves clues. And for someone who's starting, to see the clues that you left behind, you did a little research online, but then you went out and you're very comfortable going out and doing some real work, beating the streets, and you really come back with the opportunities there.
And from what I read, like that's a habit you've had from the beginning, that you were out knocking doors and meeting people and making relationships. That's been carried you all the way through.
Yeah, and I can tell you, when we met, you were open to meeting me, and you had just come from a meeting, and then he was going to a meeting right after. So you're a busy
Extrovert.
guy, and you are constantly having these meetings. That's the sort of patterns and habits that I think for folks, even myself, who's always trying to sharpen the saw, get better at it. I really have learned from you already in our time spent together. I love that, and I think that it's obviously something that you're very naturally are good at, but the dividends come through. So number 6, raise capital. 7, close the deal. 8, reposition the property. 9, find the right tenants. So once that property is ready, now you have to find the person who's going to pay the cash flow. And then 10, reap the rewards. And I really think that these 10 steps you have put together really crystallize in a simple but complete way what we try to do at Neighborhood Ventures, and it also helps us understand some areas that we want to get better in. I have one last question for you. So if you go back to your days at Colgate, coming out of college, what would you say to a younger person, whether that be an age or an experience, who's wanting to own more real estate? If you were talking to that person like yourself when you were coming out of Colgate, what are the 2 or 3 takeaways that you would tell yourself at that stage?
Well, I think I would have gotten into investing a whole lot sooner. And so, yes, I had to figure out kind of the landscape and figure it out as a broker, and also pull together some savings. Although I think lack of capital is one of the number one things that hold people back from investing, especially in a big market like New York. They say, oh, I see these buildings are selling for millions and millions of dollars. I only have 10,000, I have 100,000, whatever it is. And so you just figure, I'll just wait. Right. And I did wait, or I saw opportunities come and go that I didn't jump on. And what I talk about in the book now is, if you're looking to go into your first real estate deal, what's the value you bring to the table? It's the deal. It's finding that opportunity. Maybe you have some expertise where you can put in some work, and, maybe there's some brokers listening to the show right now. So, if you're a leasing broker, maybe you help bring the tenant, whatever it is, and then find a great partner. And I didn't do that early on, because I think I probably could have landed in a lot more opportunities if I saw something and I brought it to an experienced operator developer and said, look, I found this. I think it's great. I don't have the money to do it on my own, but can we team up on it? Maybe give me some sweat equity in the deal. I'll try to raise some capital along the way. I think I would have gotten access to a lot more opportunities. And instead, I think I was so nervous early on, or worried that if I found this great opportunity and I told someone else about it, I was just going to lose out and someone else was going to jump on it. And sure, maybe that could happen, but 100% of nothing is still nothing.
The more we can jump into some things, even if they don't work out in those early days, we learn so much. And I think a lot of us tend to overthink in our 20s, mid 20s, late 20s, as we're getting in. We tend to overthink instead of just trying things. And the great thing about real estate is, even if you make some mistakes along the way, it tends to come back around and figure itself out if you have the patience and the time to work through it. So it's a great area to learn, to get your feet wet. And I want to recommend this book. You can find it at Barnes & Noble, as Heather did over the weekend right here in Phoenix.
Yeah.
You can get it on Amazon.
In person, yeah.
I don't think it's on Kindle, but it's you can get it on Amazon.
Is
it
I
on
think
Kindle?
It is on Kindle. There's
That's
even
cool.
an audio version, which I offered to read, and they said, James, it's okay, leave it to the professionals. So
awesawesome. Great, quick read, but meaty. And it's been great to have you.
Yeah. Well, I tell you, the thing I really liked about it is because I looked at it through the lens of our investors, how they would benefit. And I thought it really gave the right questions to be asking, really teaching them and training a lot of new investors what to be looking at when we have new projects come up. These are the questions to be asking, and they can really test us out. And have we done our job? And they can feel, I think, more secure and empowered about their investment. And so that I really did like that. I thought it gives them the right questions to ask.
Heather, that is such a great point, and I'm really glad you made that, because people look at this and say, "Oh, well, all right, I'm not going to do this on my own. I'm going to just give my money to another investor or sponsor." Well, yeah, but to your point, you need to be able to qualify them and ask them the right questions. And when you're looking at that offering memorandum, you want to see, did that sponsor do the work? So even if you're not going to go out and do the research, look at the comparable sales, look at the case they're trying to make to understand, is this a good opportunity or not? Right. And to poke around and be able to ask other people to vet, it's really important. So even if you just plan to be a limited investor, it's worth doing the work and kind of understanding, and also getting a sense of the type of things that you want to go into. So that's really a great point.